We have answered required 1. We were supposed to get the adjusted partnership profit or loss for the year. Here it is. Required 2, distribution schedule for the profit or loss. So distribution schedule is the way we had said. So we'll come and now distribute whatever we have determined. So I'll delete just part of this. And then I'll also change the names here because they are 2. And then I'll also change this. Let me delete this. So I'll call this the partnership name, Kasuku Traders Partnership. Income distribution or allocation schedule. And then here we noted there were 3 partners, by the way. So I'll delete this so that I can introduce the 3 partners. I'll give them the initials. As you have seen, there's Kamara. So I write KA to stand for Kamara, Susan, SU, and Kubasu, KU. And then totals because of the space. So shillings, 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 shillings. So we had said the first thing we normally distribute is the salaries to the partner. So you just need to go to the question and determine if there was salaries to the partner. When you read through from the income statement, there was none. Additional information number 1, 2, 3. It was in point number 7. So you come and say now salaries to the partner, Kamara, 600,000. Susan, 450. Kubasu, 225,000. And now we get the total. We add the 3 to get the total. So 600,000 plus 450,000 plus 225, which give us 1275,000. There. Then the second one is interest on capital. This one, when you go to the income statement, you have to remember the 4 that we talked about first. The salary, interest on capital, commission or bonus, there's interest on drawings, those 4. So you follow them that way. The next one is the interest on capital we had written. So we check. It is there in the income statement, interest on capital. So we'd have here 47,500. The other one is 185,000. The other one is 146,000. And now we get the total. So 407,500 plus 185 plus 146, which give us 738,500. Then the other one that we had here was the commission or bonus to partner. But I'm very sure as we went through the question, there were no commission or bonus to the partner. So if it is not there, ignore, just assume it. You go to the 4th one, raise interest on drawings. In the question, we didn't have interest on drawings to the partner, none. So now we do the last one, 5th one, which we said is the profit share. Profit share. So profit share, how do you get? We said we take the operating income, this one, of 125 to 50 minus what you have distributed. You have distributed this and this, which is 75,000 and also 738,500. Then what remains, you share according to the profit sharing ratio. That's what we said. Profit share, you share according to the profit sharing ratio. If you look at the first paragraph, is where we have the profit sharing ratio. Kamara, Susan, and Kubasu are in partnership trading as Kasuku, sharing profit and losses equally. They are 3, each to get a third. So first one, a third. The other one a third. The other one a third. So let's see what remains. We'll start with 125 to 50, and then we minus 1275,000, and then we minus 738,500. Then we have negative. It will be negative. We have negative 1888. So I'll extend this a bit. 250, which is a negative. Now each is supposed to get a third, so you divide by 3. Each to get 629. 416. I want to round off to, because it's 416.6. 417. So 417, which is a negative. Same case here, because it's for each, and the other one is 629, 417. All they are, remember, are negative. So from there now, we need to get the total taxable operating income. Operating income. So total taxable operating income would mean we take this plus this minus this, because it's a negative. The same case for everyone. So we start with 600 for the first one, 1,000 plus 407, 500 minus 629, 417, and then we get positive 3. So this would be 378, 083 positive. And then now we go to the second one for Susan for 50,000, and then we add 185,000 minus 629, 417, 5583. Then for Kubasu, 225,000 plus 146,000 minus 629, 417. This is a loss of 258, so negative 258, 417. Then now we get the total, which would be 1275,000, and then we add 738, 500, and then we minus 1888, 250, which we get 125 to 50, 125 to 50. And that answer, you'll find it is starting with the operating income, because remember we have been distributing this operating income. Actually, we can even write it here, 125 to 50. So at the end, the total column should tally with the operating income, because we have distributed through salary, interest, and profit share. Once you do that, now we said the investment income come here. You add the taxable investment income. Taxable investment incomes. So for the taxable investment incomes, so we need to go to the question, especially in the income statement, determine if we had an investment income, and then we share if it is taxable. The first investment income in the income statement is the dividend income, which we are told it is net. What we say is this: if you are given an income like dividend or interest, and you're not told where it's coming from, always assume it's a non-qualifying dividend, or non-qualifying interest. Like this one, they have not indicated where it's coming from. So being non-qualifying means that the withholding tax was not final. We need to tax it further. So the dividend that we don't put here are the one that we indicated as exempt or qualifying, because exempt are not taxable, and here we are talking about taxable. Qualifying, withholding tax, if it's final, you are not supposed to tax it again. So only non-qualifying. So this one, being that it has not been indicated, we assume is non-qualifying, so it should be here. So dividend income, where we have 562,500, and then it is net. Remember, we said that for non-qualifying dividend, if you are told net, withholding tax is 15, meaning they have already deducted 15, meaning this is 85%. Remember, we said you only tax the gross. So if this 85, 100 will be what? To get 100, multiply by 100 over 85. And then profit sharing ratio, each was to get a third. A third. So it will be 562, 500. We multiply by 100, divide by 85, you get 66, 61, 764. Uh, 765, we round off, and then divide by 3, which comes to 220, 588. Now with that one, we have distributed the dividend. There is another investment income, rent. We said if you're not told where the rent is coming from, you assume it's a commercial rent, so that you tax it further. So here we have not been told. And then for the rent, you must minus the allowable expense relating to rent. Repair, caretaker salary for the rental. But for this question, we haven't been told whether there were any expense related to rent. So we distribute the way it is. So rent income, which we have a 415,000, and then profit sharing ratio, each to get a third. So that would be in total 415 divide by 3, giving you 138,333. 138,333. And then since there is no other investment income, we can now get total taxable incomes. So total taxable income, we do them this way. If the operating is positive, that's the time that we add investment. Like this one is positive. But if it is negative like this, we don't add. We cross it there. Remember, we say that a loss from one activity can only be deducted against profit of the same activity. So operating for this guy, this person, they had a negative. It will be carried forward to next year. So next year, when they generate a profit, he generate a profit or she generate a profit from the operating, she deduct this loss. So for this year, he will be taxed on the investment income only. So for this one who have positive are the one that we add. The negative we don't add, we only add the positives. So we start with the first one, 378,083. 083 plus 220, 588, 220, 588, and then we add 138,333, which give us 737, 004. We go to the next one, 5583, and then we add to 20, 588, to 2588, and then we add 138, 333. We get 364, 504. For this one, remember we said we don't add the negative, carry forward to next year. We only add the positives. So 220, 588 plus 138, 333, which we get 358. 358, 921. And then we go to the total. 125 to 50 plus 661, 765, and then we add 415, 415,000. So giving us 1202, 015. Yeah. And the question ends there. And this total cannot be the same as this way because this we didn't add. So this we carry forward to next year. So as per the question, that is where we stop. And that is how we determine the taxable income of the partnership, and we do the distribution. For now, we are going to stop there until I see you in our next lesson, where we are remaining with one business, that is the limited company. We see how limited companies are usually taxed. Thank you very much. However, make sure that you do the assignment that is being shown at the end of this video. Thank you very much.